Okay, picture this. A billion-dollar company, run by just one person. Seriously. No huge offices, no endless layers of management, just a single founder. And look, I know it sounds like something straight out of science fiction, right? But what we're going to break down today is exactly why this isn't just possible, it's actually becoming our next economic reality. So, to really wrap our heads around this massive shift, we've got to talk about one key idea at its core: leverage. And this quote, it just nails the evolution perfectly. For, 100 years, the industrial era rewarded size. Bigger was better. Then, the digital era came along, and it was all about speed. But now, now the rules are getting a total rewrite. The winning play today isn't about being the biggest or the fastest. It's about who has the most leverage.
And let me be super clear here. This isn't some prediction for the distant future. No, we are living through this massive structural shift right now. We're talking about one single person being able to achieve the output that used to take hundreds, maybe even thousands of employees. So the big question is, how on earth is that even possible?
Well, the journey to this one-person enterprise, it's really a story about one thing: compression. It's all about systematically squeezing out the huge costs and the massive barriers that used to define what a company even meant in the first place. Okay, let's just track this evolution because it's fascinating. First up, the industrial era. If you wanted to grow, you had to hire more people. Simple as that. That was your scale. Then along came the 90s and software, which compressed the cost of replication. Suddenly, you could sell 1 million copies for pretty much the same cost as selling one. Huge. After that, the 2000s gave us the cloud, and that compressed infrastructure. All of a sudden, you didn't need to buy and maintain a building full of servers, you could just rent computing power. And that brings us right to today, to the final and honestly the most profound compression of all. AI is now compressing the cost of cognition.
And we really have to be clear on this point. This isn't just simple automation, like a robot on an assembly line. This is leverage over thinking itself. We're talking about amplifying all that cognitive work: the writing, the coding, the analysis, the strategy. It's literally like an exoskeleton for your mind. And when you have that, well, that completely changes the entire economic game of building a company.
So, what does a company even look like when you take away the need for a huge staff? Well, it looks like a fully automated enterprise. Basically, a system that's designed from the ground up to generate revenue with as little human intervention as possible.
And here's where you see the real difference, right? In a traditional company, what's your biggest cost? It's people, your salary budget. The founder's job is to manage those people, and your growth is totally tied to hiring more of them. But in a solo AI company, your main cost is API usage. You're basically paying for AI models to do the heavy lifting. The founder isn't a manager of people anymore. They're a conductor of systems. And here's the kicker: growth is completely decoupled from labor. You can bring on 10,000 new customers overnight and not hire a single new person. That right there is the magic formula.
So yeah, this founder isn't managing departments full of people. They're orchestrating a toolkit of powerful services. Think about it. Instead of a whole engineering department, you've got your cloud infrastructure and your AI APIs. Instead of a sales team, you've got automated CRM systems. Instead of a finance department, you have automated billing platforms. The founder is literally the conductor, making sure all these digital instruments are playing together in perfect harmony.
Okay, so how does this actually translate into real money? Let's talk about the bottom line. Take a look at this number: $1 million. And no, that's not a valuation, that's potential monthly recurring revenue. The math is actually pretty simple. If you build a valuable AI tool and you charge, say, $100 a month for it, you only need 10,000 customers to hit that $1 million a month mark. And when your costs to serve each new customer are almost zero, well, the profit margins can be absolutely staggering.
Okay, so the model makes sense, right? But where are these solo giants actually going to pop up? What are the new hunting grounds for this kind of crazy innovation?
Well, the prime industries are the ones that are just filled with repetitive, data-heavy, knowledge-based work. I mean, think about it. An AI that can review thousands of legal contracts in a few minutes instead of weeks. Or how about an AI tutor that gives personalized education to millions of students at the exact same time? The common thread here is really simple. Anywhere you find a process that's built on structured data and repeatable decisions, that's where a solo founder can come in and create unbelievable leverage.
And this brings up a really key strategic point. The goal here isn't to build the next Google, not at all. It's to build an absolutely essential mission-critical tool for a very specific niche. Something like an AI that automates compliance reporting just for regional banks. The idea is to dominate a very well-defined slice of the market.
By doing that, a solo founder can build an incredibly valuable and, just as importantly, a very defensible business.
Now look, this all sounds incredibly promising, I get it, but we need to be realistic. This isn't some kind of fantasy get-rich-quick scheme. This path comes with its own unique and really intense set of challenges. So let's talk about the human factor. What are the actual realities of being a company of one?
The risks here are pretty significant. You've got to worry about regulations, you have huge security responsibilities on your shoulders, and of course, there's always the threat of competition from the big tech giants. But look closer at this chart. The biggest risks here, they're human, founder burnout, and what's called concentration risk, the fact that the entire enterprise rests on the shoulders of one single person. The pressure is just immense, and it makes the whole system incredibly fragile.
Yeah, this model really isn't for your typical startup founder, the kind who's aiming to be on the cover of a magazine. It takes a very different kind of person. We're talking about a true systems thinker, someone who would much rather write a script to automate a task than hire a team to do it. These are people who crave autonomy and efficiency, not a massive org chart. And that psychological shift, it's every bit as important as the technological one.
Okay, so when a trend this powerful really starts to take hold, it doesn't just create a few new companies. No, it creates aftershocks. Aftershocks that ripple out and start to redefine our entire economy and our fundamental understanding of what work even is.
And this leads us to the big, unavoidable question, the one that our entire society is now having to grapple with. This level of leverage, it's a massive downward pressure on the value of human labor. And sure, new kinds of jobs will probably emerge, they always do. But the transition to get there, it's going to be incredibly disruptive. And it's all happening at a speed we have just never seen before in human history.
But maybe the most profound shift of all is philosophical. It forces us to ask, what even is a company anymore? For centuries, the answer was pretty simple, a collection of people working together. But the new definition, it might just be a system that produces value, period. And it doesn't matter if the components of that system are human brains or silicon chips. The company becomes this automated, value-generating machine, all orchestrated by a single mind.
So, let's just wrap this up. This isn't speculation anymore. It's not a what if. The tech is here, the economic incentives are all lined up. The rise of the one-person billion-dollar company isn't some crazy idea, it is the logical conclusion of this entire era of extreme leverage. So the question we're left with is no longer if this is going to happen. The real question is, how often will it happen, and how soon are we going to see it?